Every single day, you are hit with a barrage of financial information. Between the 24/7 news cycle, thousands of posts on Reddit forums, and endless macroeconomic data drops, the sheer volume of daily noise is deafening. If you try to time your index or ETF contributions by reacting to these daily headlines, you are actively destroying your portfolio's performance. The reality is, our brains simply aren't built to process and perfectly filter this extreme volume of simultaneous financial data. By the end of this video, you will have a 5-minute daily checklist built on pure empirical data to guide your capital allocation. We are going to build a personalized, rules-based strategy that removes the guesswork. It will explicitly tell you when to buy, when to hold, and when to move to cash. Because long-term investment success comes down to systematically ignoring the noise to reveal the true signal. Step 1 is shifting your perspective. You need to completely discard your one-day and one-week price charts. This chart shows erratic, algorithm-driven daily returns. When pulled back to a 6 to 12-month timeline, that chaos smooths out into clear macroeconomic trends. It's exactly within this window where underlying fundamentals take control and steer the market's direction. Because we are looking at this specific time frame, what traditional financial media calls good news often acts as a mathematical sell signal. Take corporate earnings growth. Intuition tells you that peaking corporate earnings are a reason to buy, but empirical data proves the exact opposite. High earnings growth is a late-cycle warning of an impending market correction. The same goes for valuation metrics like the CAPE ratio. High valuations look like a clear reason to sell, but at a 6 to 12-month horizon, sheer trend momentum overrides mean reversion, making it an empirically positive indicator for extended periods. Relying on a gut feeling or traditional Wall Street adages puts your money at risk. Only mathematically validated data can accurately protect a portfolio from major regime shifts. To track those macro conditions without spending hours researching, we use the Market Environment Indicator, or MEI. The MEI compresses 15 macro signals into a 1 to 10 score. 8 to 10 is a strong buy, increasing exposure. 6 to 7 is favorable, maintaining positions. Lower zones trigger defense. 4 to 5 means reduce exposure, while 1 to 3 demands moving to cash. This single number replaces hours of anxious daily research. It turns subjective market ambiguity into a clear, objective instruction. While the MEI tracks the macro environment, we use a secondary check called divergence to spot extreme mispricings. Divergence is calculated by measuring the numerical gap between emotional crowd sentiment and actual hard fundamental data. The market crash in March of 2020 is a perfect case study of what happens when media-driven panic completely detaches from reality. This chart shows the data. Red crowd sentiment plunged to 15, while blue fundamentals held at 45. This 30-point gap is an actionable undervalued signal. Buying this divergence preceded a 60% rally over the next 12 months. The greatest financial opportunities do not come from following the news. They exist precisely in the mathematical gaps where human panic separates from economic reality. Now let's apply this data directly to your own money by setting up a personalized if-then rule based on your stage in life. The accumulator rule for monthly investors. Pause investments at MEI 3 to build cash, then deploy at MEI 6. The retiree rule for capital preservation. Stay invested at MEI 6 or higher, but raise cash to 40% when it drops to 3. Hope is not a valid investment strategy. Predefined, data-triggered rules executed without hesitation provide the only proven defense against major portfolio drawdowns. Your entire daily workflow now comes down to 2 checks: looking at the MEI score and watching for a 30-point divergence alert to align yourself with a 6 to 12-month economic reality. Adopting this simple 5-minute daily process completely eliminates the constant second-guessing, the endless anxiety, and the dangerous urge to panic sell when the market suddenly drops. Write down your personalized if-then rule, set your daily MEI alert, and permanently delete your financial news apps. Leave the daily noise to the high-frequency algorithms, and let empirical data do the heavy lifting for your financial future.